How is the everyday person, the one swiping their card at the checkout line, actually holding up right now?
Section 5. The Retail Consumer Reality. To figure out where the money is actually flowing on Main Street, we have to check the Q1 2026 U.S. Retail Scorecard. Out of 188 tracked companies, 175 have reported, and a massive 74% of them actually beat analysts' earnings expectations. Only 23% missed. The absolute crucial takeaway from this data is that despite all of that high-level macro noise we just talked about, the U.S. retail consumer remains incredibly resilient, driving a blended earnings growth estimate of nearly 27%.
But peeling back the layers reveals a deeply divided landscape. It's kind of like a tale of two shoppers. On one side, you've got higher income resiliency. Shoppers there spending heavily, pushing Macy's same-store sales up 3%, which was largely led by a massive 10.2% jump at their luxury Bloomingdale's brand. On the exact opposite end of the spectrum, extreme value hunters are driving growth at discount spots like Ollie's Bargain Outlet. Their 1.7% comparable sales increase is driven entirely by consumers just filling larger baskets to maximize their value per trip.
And we can see this divergence even more clearly in the forward-looking expectations for Q1. Value-oriented operators are massively overperforming. Five Below is expecting a huge 16.6% growth. Meanwhile, domestic demand for full-price, premium activewear brands is softening. Lululemon, for instance, is expecting a slight dip of 0.7%. So the consumer is absolutely still spending, but they are becoming intensely selective about exactly where that money goes.
So as we wrap up today's explainer, I really want you to consider the intersection of all these events. Between the multi-trillion-dollar AI infrastructure boom, the sweeping Project 2025 political blueprint, and the stubborn resilience of the everyday retail consumer,